Welcome. This is Lily Chu with the Better Business Bureau Education Foundation. Our mission is to blow the whistle on scammers. If you want to check out a business or charity, come to us. Our reports are trustworthy, unlike many of those glowing online reviews, which are often paid for by the seller. We maintain strict business standards to ensure you get honest and reliable reports. You can call us or go online to bbb.org to look up companies locally and across the country. We've also created a military website just for the armed forces because, believe it or not, there's scammers out there that are targeting our soldiers. And I've uploaded handouts for you at BBBEF WordPress. Just click on resources and you'll see information on car buying, paying for college, establishing credit, and much more. You're always welcome to contact me. If you have any questions or concerns, I'm a social worker and I like helping people. It's free and you won't have to cough up your social security number or any other personal information. When in doubt, check it out. Today we'll be talking about handling your money. The first thing we'll discuss is budgeting. I know most of you are already groaning at the word budget, so call it a spending plan if that inspires you to get down to business, because this is going to help you map out your next steps towards financial freedom. The first thing you want to do is determine your income from all different sources. So if you have a job, that's your paycheck. If you get unemployment, federal benefits like food stamps or SSI, retirement money, it's all considered income. Then you want to figure out your net monthly income. This is what you actually bring home in your pocket after the government and your employer have taken out for things like taxes and health insurance. Once you've determined this figure, you want to start listing your expenses. Start with your fixed expenses. These are the things that stay the same every month, like your car payment or insurance premiums. These probably won't be changing from month to month. Then list your variable expenses, obviously the things which do change from month to month, such as utilities like electricity and water, what you spend on food, clothing, entertainment. Those things probably will be different from month to month. Basically, you want to write down everything you spend your money on. And while you're listing your expenses, be sure to build in a reward for yourself, because it's going to be hard work. Whether it's treating yourself to a movie or a meal out, you want to thank yourself. But make sure that reward is something realistic. You don't want to break the bank. Next, determine your short-term, medium-term, and long-term financial goals. You may be saving up to go on a vacation, buy some furniture, or a new vehicle. Once you've listed all your expenses, total that up and subtract it from your net monthly income. What you have left over, apply to your goals. Sounds great. But what happens if you subtract your expenses from your income and you have nothing left over? Or worse yet, you don't even have enough money to pay your bills. Sadly, this means it's time to tighten your belt a little bit and quit spending so much money. But you say, how can I do that? I hardly spend any money right now, but I get to the end of the month, I look in my wallet, it's empty. I have no idea where all my money's going, but it's gone. If that's you, I'm going to challenge you. Keep track of everything you're spending your money on for at least a month. 6 is best. Make a list of everything you buy, the date you bought it, how much you spent, and how you paid for it, cash, debit, or credit card. At the end of your tracking, you'll know exactly where your money is going and how you might be able to pull in a little. Say you buy a latte every day on the way to work. Even if you get the cheapest option, it's still going to cost you about $3.50 a day, which equals just over $80 a month, and that's not including weekends. If you just made your coffee at home, you could save yourself at least $70 each month, which you could apply towards a financial goal, like building an emergency fund. Tracking your spending habits will give you an eagle's eye view of exactly where your money is going and how you might be able to pull in a bit. You also want to keep track of your receipts, bills, and statements. Anything you get on a monthly basis is considered a statement. Keep these papers organized in an accordion file, or if you go paperless, create a file in your inbox. That way, if you ever need to refer back to these, you can easily put your hands on them. Important papers like your Social Security card, passports, birth, death certificates, insurance documents, keep in one place. Buy a fireproof lockbox and put all your important papers in there. That way, if a hurricane is blowing the roof off your place, you can just pick up your box and you're out of there. Next, you want to check yourself out by looking at your credit reports. They will list every one of your credit cards and your loans along with your payment history on those accounts. It will also show public records like if you've ever filed for bankruptcy. And it's going to list every single person or company that's asked to see your credit report. So who's looking? Lots of people. Say you want to rent an apartment. The first thing the apartment manager is going to do is pull your credit report to see how reliable you are. If they see that you're always paying your bills late, they'll figure you'll be paying your rent late, so your deposit suddenly doubles. Employers can use your credit report to see how responsible you are. If they see you've got 6 credit cards that are all maxed out, guess what? Your application goes directly in the trash. They don't care about your long resume or stellar skills. You're a risk and a liability they won't take. They can also use your credit reports to determine whether you'll get a raise or a promotion. And then there's your car insurance. Did you know insurance companies use your credit score to calculate your rates? Apparently, there's a correlation between your credit score and how likely you are to file an insurance claim. So in other words, the lower your credit score, the higher your premium will be. Now you're probably going, hey, I thought we were talking about credit reports. Now you're throwing in credit scores. What the heck is that? Well, just like in school, when you took a test, the teacher gave you a test score to let you and them know how well you're managing the material. Your credit score lets lenders know how well you're managing your money based on information in your credit report. So the report and the score are two separate things. Your credit score is made up of a lot of different stuff, but the biggest chunk, payment history. So if you've ever made late payments, missed payments, walked away from a debt, that's going to count 35% against you. Next is how much you owe. This is what's called your credit utilization ratio. It sounds complicated, but really it's not. Basically, it's how much of your available credit you're using. So let's say you have 2 credit cards, and they each have a $500 limit on them. You've charged $300 on both of them. That means you're using $600 of the $1,000 available to you, or 60%. You've just lowered your credit score. Most lenders don't want you to be accessing any more than 30% of your available credit. To qualify for the best deals like 0% interest financing that you hear advertised on TV, no more than 10 to 20%. Then they're going to look at how long you've had credit and how much new credit you signed up for. Every time you apply for a credit card or a loan, a mark goes on your credit report. 1 mark's no big deal, but if you get 6 or more of these marks in a 6-month period, it will lower your credit score. So 1 trip around the mall signing up for credit cards to get some 10% discount is going to ding your credit score and end up costing you way more than you saved on those sneakers or jeans. Then they're going to look at your mix of credit. This is credit cards and loans. You may see terms like revolving credit or installment credit. These just refer to the different types of credit. So revolving credit means credit cards because your balance is going to be different from month to month, so your payment will be different from month to month, and you'll probably use the card indefinitely. Whereas installment credit is where your payment stays the same every month and there will be an end to your loan period. For example, your car payment. That's not going to change from month to month, and eventually you will pay it off. Then all that stuff gets lumped together to make your credit score. According to FICO, which is the Fair Isaac company, they're the ones who started this whole credit scoring system, Your credit score is going to range anywhere between 300 to 850. 723 is the median. So in other words, half the people have a higher score, half the people have a lower score. This is where good credit begins, the 720 range. If your credit score gets to be 620 or below, you have now just fallen into what's called the subprime lending category, which means you're only going to qualify for high interest loans and credit cards. You don't want to be there because remember, the higher your interest, the more you're going to pay in monthly fees. Every consumer 18 and older can get a free copy of their credit report from each of the big three credit bureaus once every 12 months. You can either go to this website or call their toll-free number to access your free credit reports. If you decide to go online, make sure you only go to the website listed here. There are scammers who may try to steal your identity through bogus websites or even legitimate companies, which may try to mislead you into paying for your reports. Sadly, I've heard even this website and phone number may try to sell you something like your credit score. Do not be fooled. You don't have to purchase anything to get your credit reports for free. They will ask for your social security number and some very personal questions, so don't freak out. This is to verify your identity. If you get an error message which says they cannot provide you with your report at this time, again, don't freak out. It probably just means your file is so thin they can't generate a report, but do check back with that bureau and make sure that's the case. If it's the first time you're checking your reports, or it's been a long time, I suggest getting all three at once, because there may be different information from one to the next. Some creditors only report to TransUnion, some only to Equifax. So get all three and check them out. Make sure all the information is accurate and yours. If there's a misspelling of your name, that's no big deal. Often, if you have a common name or are the junior of a family, someone else's credit may have gotten lumped onto your credit report. If that's the case, you'll need to write a letter to that credit bureau disputing the inaccurate information. Any old or inaccurate information needs to be disputed. If you need a sample letter, please contact me or go online and search for one. Be aware, bad credit should only appear on your credit report for up to 7.5 years, even if you never paid it. Bankruptcy, up to 10. Once you've cleaned up your credit reports, the next year you can order one every 4 months to monitor your credit over the course of the year to see if anyone has stolen your identity. Next, you want to get your credit score. Remember, that's separate from your credit report. It will usually cost about $15 from each of the bureaus, but the website listed here at the bottom will give you your Experian and TransUnion scores for free. They will try to sell you some other stuff, but you don't have to buy anything to get your scores for free. Here's an example of what good or bad credit gets you when you buy a car. Say you want to buy a $20,000 vehicle. Chances are you don't have $20,000 cash, so you're going to have to take out a loan. On a 4-year loan, and by the way, if you have to finance a vehicle for more than 4 years, pick something cheaper. Because once you get into longer term loans, you may end up in what's called an upside down loan, which basically means you owe more money on that vehicle than it's worth. So even if you were to go out and sell it the very next day at top dollar, you'd still owe money on it. So 4 years should be tops as far as financing a vehicle. Okay, if you have excellent, and I do mean stellar credit, you may qualify for that 0% interest financing that you hear advertised. This means your monthly car payment will be about $417, and at the end of that 4 years, you paid nothing in interest to use that money over the term of the loan. In other words, that $20,000 vehicle cost you $20,000. If you have good credit, you may be looking at about 6% interest. Well, this ups your monthly car payment by about $50, and at the end of that 4 years, you will have paid a little over $22,500 for that $20,000 vehicle. If you have bad credit, you may be looking at about 15% interest. So now your monthly car payment is over $550, and at the end of that 4 years, you've paid almost $27,000 for that $20,000 vehicle. So you can see how having good credit qualifies you for good deals. If you've got good credit, you're going to pay less for things than if you've got bad credit. Here are a few things to stay away from. Instant tax refunds. Quick and convenient, right? While you may think you're getting your own money, that company is actually loaning you the cash using your refund as security because you'll have to sign over your check to them. And like any loan, there's fees involved. These days, if you have a bank account and file your taxes electronically, the IRS is trying to get your money back to you in as little as 10 days with no fees, so you'll get your full refund. Rent to own. Again, sounds convenient, but you're paying at least double the amount it would cost to buy that item at practically any other retail outlet. And you may be getting something that's used. Also, if you miss a payment, say bye-bye to that big screen TV and all the money you paid towards it. Credit repair. You'll get big promises and usually lots of bad advice. Some really slimy scammers will tell you to do illegal things, which could land you in jail. If you find yourself with unmanageable debt, check out my Help I'm Sinking video. Bottom line is, nobody can do anything for you that you can't do for yourself for free. At the end of the day, develop and use a budget to have enough money for what you need and probably most of what you want, so you can cruise up the road to financial freedom.